Let me introduce you with Lim. He's a small investor from Johor Bahru. Like many in Southeast Asia, he's wondering, should I invest in small businesses around me, or should I just buy stocks listed on Bursa or SGX? Today, we'll break down the difference between private equity and public shares and help you decide what works best in our region. Private equity means investing directly into a business that's not listed on the stock market. Think of that successful F&B chain in KL, or your cousin's logistics startup in Jakarta. You're buying a piece of that business, usually with higher risk, but also higher potential returns. You can get in early. You may help grow the business. You negotiate your own deal, but your money is locked in. No daily share price, harder to exit. And what is the stock market then? Public shares, like stocks on Bursa Malaysia, SGX, or IDX, are companies listed on an exchange. They're regulated, transparent, and you can buy, sell anytime. Easy to start, even with RM100 daily prices. Safer for beginners. But you're one of millions of shareholders. You have zero say in the business. The market moves on sentiment, not always logic. Let's say you invest RM100,000 into option A, your friend's logistics SME projected to triple in 5 years. Option B, shares of a public company like Mr. DIY. If the SME grows fast, you might turn RM100K into RM300K, but if it fails, you could lose everything. If Mr. DIY grows steadily, maybe 6 to 8% returns a year. Safer, but slower. In Singapore, investors prefer stable dividend stocks like DBS or Singtel. In Indonesia, more investors are turning to private tech startups in cities like Bandung and Surabaya, hoping for a Gojek-style return. The trend? Retail investors are mixing both, stable income from stocks and high-growth bets in private deals. If you are new to investing, start with the stock market. Learn the basics. If you have extra capital, industry knowledge, and a strong network, consider private deals. Some seasoned investors in Malaysia or Thailand do this, 80% in public shares for safety and 20% in private equity for high growth. That way, they are protected, but still open to big wins. Private investments are riskier and less regulated. Don't just invest in your cousin's cafe because it sounds cool. Always ask for financials. Understand the business model. Know your exit plan. In the stock market, don't just follow TikTok trends. Do your research, even if it's boring. Private equity or stock market. In Southeast Asia, both paths have value if you know what you're doing. So, before you invest, ask yourself, how much can I afford to lose? How much do I understand this investment? If the answer is not much, start small. Learn and grow. Comment below, would you invest in a local SME if given the chance? Like, subscribe, and stay tuned for the next video.